Good morning, good afternoon, good evening, wherever you are. Welcome to my YouTube page. Just wanted to kind of address something while I'm here, that came up because somebody asked me a question in regards to using cash value insurance and credit card. So I want to address that. So, hey, before I go into it, please remember to subscribe to my YouTube page and follow us, on Instagram and Facebook and all that stuff. But click the link and subscribe to this YouTube page. But here, listen. So, credit card and cash value insurance. So, here's what I do, and this is one thing I want to advise you to do is this. See, let's say I'm going on vacation, right? I'm going on vacation. Let's say you decide, okay, you want to go to Jamaica for vacation, and you've already built up your cash value insurance because you already know what hotel you're going to stay, you know how much it's going to cost you for that, you know your flight ticket, all that. Charge it to your credit card. And I always recommend credit cards that you get points and miles, right? Charge it to that credit card, get the points or the miles on the credit card, and then go on your vacation, have fun, enjoy yourself, have a blast, because everything is charged to your card and you've got the points and miles waiting on you. Now, when you come back from your vacation, request a loan immediately from your insurance company, from the cash value insurance that you currently own, and request a loan from them, and then they're going to wire the money into your bank account. And then you take the money from your bank and pay off the credit card. Now, you're using the insurance company's money, not your savings, because your savings in your life insurance is still secure, it's still safe, it's still earning compounding interest and growing. Now, when you pay off the credit card company, now the monthly payment that you would have been paying to the credit card company, or the lump sum you would have paid to the credit card company, now you could do that back to the insurance policy. Now, why would I go through all that process? Well, first, because in the eyes of the credit card company, you're debt free, you've paid them off, and then they report to the credit bureau and say, listen, this guy is a great a debtor. He pays his debt. He's a great person to loan money to, which also helps build your credit, right? So that's one. The second thing is, now you've done a balance transfer with the insurance company. So because you did a balance transfer with the insurance company, you're not required to pay back quickly. So there's no stress. So you take your time to pay back the insurance company, while at the same time it's not reported to the credit bureau. But the most important thing is, if you choose to pay back the insurance company, you just got to figure out when your anniversary date and what the rules are with the particular policy that you have. The ones that I use, when I pay them back, the interest is credited back. So whatever interest they charge me up front, they pay it back to me. If I use an IUL for the same play, the interest on the IUL that I use, the company that I use, does not show up for 12 months. So I have 12 months to pay back the loan. Then it ends up being like a zero interest loan. So I always use that for a lot of real estate deals. I'll do another video talking about real estate, how to buy real estate and investment using life insurance cash value to do that. But for now, we're dealing with credit cards and stuff like that, all vacations, right? To pay on vacation, so you're not paying high interest on your vacation. You're not stressed about it, and it gives you the ability to use your money twice and still have protection in your life,